Hi there traders, this is Matt Krupski here at Chartered Financial Services with your weekly options beat here on Tuesday, April the 4th. This week we're looking at April live cattle options. They come off this Friday. Just as a reminder, in the weekly options beat, we tend to look at options that are close to expiration. We do this because as the options get closer to expiration, your Greeks can be affected rather quickly, rather acutely. So as those Greeks are changing, hedging activity in the market from the options market makers can drive the prices and greater influence the futures prices. So it's always a good idea to kind of take a look at what the open interest is in the options that's coming off, and that may give us a clue as to which way the market may go in the short term. This week we're looking at April live cattle options in the open interest here. This morning we came in, April live cattle is trading about 119. It had backed off from the highs it made last week, and this morning actually as I record this looks like we're trading down a little bit below that, but the majority of the puts are currently out of the money. With us trading between 119 and 120, it looks like that puts only about 7% of the puts in the money. On the flip side, 57% of the calls were in the money this morning. That is an unusually high number. A lot of times what happens as we get close to expiration is a lot of the calls that are in the money, because of the hedging activity, as we start to move one direction, especially if we move lower, these calls that are in the money all of a sudden are going out of the money, and the hedging activity with the option market makers ends up pushing the market actually lower, so these calls end up going out worthless. The way to use this table I have here is just kind of as a general idea as to where basically the minimum number of calls and puts would go out in the money. And as you can see, if we do continue to sell off, it looks like it'll target right there at the 115 to 116 level. That would take the calls from almost 60% in the money this morning down to 30%. On the flip side, of course, as we go lower, more puts go in the money, but that would only jump up to about 25-26% in the money right around that 115 line. So on the graph here, you can see the calls are the blue line, puts are the orange line. It's just another way of looking at what we just talked about. Look at all the blue calls per strike that are currently, below 119. Anything below that red line at 119, it's a blue bar, is currently in the money. So as we go down the line, meaning down in price in futures, those calls come out of the money. You can see there's a big line at that 116. We get below 116, that takes a big chunk of those calls out of the money. On the flip side, there's a big orange line, puts at the 114 line there. You can see that looks like the highest open interest. So we would probably, I would think, stay above the 114 line going into expiration here to keep those puts from expiring in the money. So my best guess here going into the end of the week is look for April live cattle to trade down to 115. That looks to be the magnet this week. Again, doesn't always work, but it's just a good idea to keep an eye on it. If you have any questions, I'd love to talk to you about it, and we can get further into the specifics of how the hedging works and why the futures market can be influenced by this hedging activity. And as a reminder, these are my thoughts, not those of ADM Investor Services or Chartered Financial Services. Thanks, and have a great day.